Dividends are one of the best forms of passive income in the entire world. The only thing better than just the dividend, however, is seeing your dividends increase by themselves. This can happen in two ways. Firstly, your dividends automatically reinvest and therefore give you more income, or secondly, the company that you are an owner of increases their dividend by a certain percent, increasing your yearly income without you having to lift a finger. I am personally a huge believer in these companies that consistently raise their dividend by a substantial amount, and for that reason, I'm going to go over 3 companies that each just had a big hike to their dividend. All 3 of the companies in this list are companies that I am either a fan of or own in my personal brokerage account. Anyways, let us get right into the video. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. The first stock on this list is a stock I've never mentioned yet on this channel, but it is a stock that I think is definitely worth talking about. This company is the John Deere Company, ticker DE. John Deere is a company that primarily specializes in high-quality premium farm equipment. They manufacture expensive forestry equipment, agricultural equipment, and lawn care equipment. A lot of people, especially those who aren't familiar with anything to do with farming, don't realize just how expensive some of this equipment can be. For example, this tractor that I randomly pulled up on their website is currently being sold for $644,000 without any additional add-ons. That is over 2.5 times the price of a brand new Ferrari. Their premium equipment that ranges from a few $1,000 mowers to a tractor that costs literally over $1 million makes them a behemoth company in the agricultural and farming world. The thing is, going into the future, people will obviously still need food, and with the more demand for food being driven up by an increasing world population, farm equipment that is produced by companies such as John Deere will continue to be a necessity as they increase efficiency of farms by a staggering amount. The stock just recently hiked their dividend by 9%. However, this dividend has been raised 4 times in the last 5 payments. You heard that right. John Deere stock has raised their dividends 4 separate times in what is basically the last year. This means that comparing Q4 dividend 2022 to Q4 2023 shows a dividend increase of over 30%, which is absolutely insane to think about. This dividend growth is phenomenal and is backed up by some other great fundamental metrics. The company currently generates around $52 billion of revenue annually, and their most recent quarter they generated around $15.5 billion in revenue. This resulted in the company making just under $6 billion in profits, as their gross margin for this quarter was 38%, which is pretty fantastic, though definitely higher than usual. This means that the payout ratio for the John Deere company is ultra low, sitting at just around 15%, which is not a lot at all and leaves super ample room for growth, which makes sense considering the recent hikes the company has been pushing. This is something the company will want to continue doing, as John Deere has been paying their dividend consistently for 33 years. They are no longer a dividend aristocrat, as they paused growing their dividend due to the COVID-19 pandemic, but dividend growth in history with this stock is still extremely solid. The large dividend hikes that just came recently might be as a way to make up for the pause in hikes that happened in 2020. The 10-year dividend growth CAGR is sitting at just around 10%, but recently the hikes have been much higher, which is a good sign. Lastly, the stock is also down nearly 20% since all-time highs, meaning the stock looks pretty fairly valued at current levels. This stock is fantastic in my opinion, and one that I'm looking into due to the great dividend growth, market-beating results, and fair evaluation. The second stock on this list is a stock I own myself, and it is Automatic Data Processing, ticker ADP. This stock currently yields just around 2.4%, which is a fair amount above market average, and it also just grew their dividend by a solid 12%, resulting in them paying $5.60 annually per share. This company is one that definitely isn't too interesting, but rakes in tons of money. ADP is a human resources company that focuses on issues largely regarding payrolls. ADP makes money from clients, aka companies, and in return, ADP makes the payments of employees easier, hence the name Automatic Data Processing, as calculating these wages is just data. ADP processes paychecks for 1 in every 6 American workers, which is a huge consumer base, and they also have a deal with Amazon, which in itself is a huge consumer base, as Amazon has over 1 million employees in the United States. In addition, at any given moment, the company is holding anywhere from $20 to $25 billion of customer payroll funds before distributing them back to clients. This is basically a no-interest loan that ADP is able to profit from. They say that they profit anywhere from 2 to 3% on this quote-unquote no-interest interest loan by investing it in extremely low risk investments that can be liquidated at any given moment, given that that is required. ADP has a 10-year dividend CAGR of 12.5%, which is really great, and recent increases are even slightly higher. Not only this, but like John Deere, this stock is market beating with a 5-year capital appreciation of over 75%. The payout ratio for the company is higher, sitting at just north of 55%, but it is still sustainable by their free cash flow. And given their track record of healthy dividend growth, they clearly have no sign of slowing it down. Speaking of the long track record, the company has increased their dividend for 25 years consecutively, and they have paid a dividend for 48 years consecutively, meaning they are a dividend aristocrat, making them the second stock on this list. The last stock on this list is my favorite stock I have ever invested in, and a stock that just increased their dividend by 14%. Meaning their quarterly payments are now going to be $5.25 per share. This company is of course Broadcom, ticker AVGO. The stock used to yield considerably higher than the current yield of just around 2%, but due to the insane rally behind the stock, a year-to-date gain of nearly 100%, the yield has significantly lowered. This stock has been by far my best performing stock of this year, and I have been buying shares of this company even up into the low 900 ranges just because I have a ton of faith in this company going into the future. As the world becomes more dependent on technology, Broadcom and other chip manufacturers will continue to reap in more and more profits. The reason I chose Broadcom over other US chip manufacturers, however, is because of a few reasons. Firstly, Broadcom has a really good dividend. Even with their current rally, they still yield above the market average, which is around 1.5%, which is pretty insane to think about. Also, Broadcom has solid and dependable income, with their major deal with Apple reeling in secured cash for at least the next few years. Due to this, they are simply less speculative than many other chip manufacturers are. For example, TSMC in my opinion is a scary investment due to international conflict, and companies like Nvidia simply don't yield enough and are too risky for me personally. Therefore, Broadcom was the perfect in-between for my portfolio. A common theme with every stock on this list is that it has beaten the market pretty considerably. This is especially the case with Broadcom, with the stock being up over 300% in just the last 5 years. The 10-year dividend CAGR is over 35%, and even though the recent increases have dropped substantially since then, they are still healthy and great to see. Overall, despite the fact that the stock is looking pricey at current levels, it is still my favorite on this list. Thank you guys for watching this video. If you agree with my picks, let me know down below in the comment section. If not, let me know why as well down below. I haven't been uploading as much recently as I have been quite busy, but I am planning on getting back to uploading twice a week starting right about now. Thank you guys for your continued support. It means the world to me. I will see you all in the next video. Goodbye.